from that job, when that roll up went bad and all that, what was your next opportunity?
So I was still there. I was in sales. I was doing really well. And then a company approached me and they said, this was a big network consulting company as well, but they were the same size, let's say, but they were more experienced. They had been around for 15 or 20 years. And they had a very big East Coast presence and a very big West Coast presence. And they wanted to invest and start a central region. So they had maybe 5 offices, between the East and West Coast. And they said, we want to start in Chicago. We have 1 employee there who's supporting just 1 Chicago client, and we want to blow it up. And so they hired me to be a regional vice president, to be part of the management team and to grow this. And I had, I was coming from a sales background and some operational background. So they took I was young, I don't know, maybe it's 27, 28. And they took a shot on me to do that. So that was my next thing. So I started that branch and region for them. And it worked out wonderful, right? So I thank God, I know that I had some good breaks and I leveraged some relationships and I closed some deals and those led to other deals. And so I eventually grew that office to, there's maybe, 40 people there. And then I opened up another office in Texas and Dallas, and that was another 20 people there. So it was super successful. And I had my own P&L finally, and I was running kind of like my own business. So I learned, I would say, the most right there. That was where I learned a lot. And
that company, still, are they still around today?
No. Like everybody else, they got sold. One of my clients actually bought that company. So one of the companies that I sold to was R.R. Donnelley and Sons, world's largest printer at the time. And they knew that printing was going to be changing, so they started diversifying and they started buying businesses. So they had this other services business and they matched us with that. They bought my company. I was a shareholder in that company, so that was my first kind of go at getting some money for equity, right? So I was part of that deal, and and then they bought us, and then they matched us with this other division, and then they did an IPO. This is when in the .com area where everyone's doing an IPO, but we had real revenue, real earnings, so that was drinking from the fire hose. I built a whole region, and then I went through an acquisition. I got some money for that, and then I went through an IPO. And then I was part of a publicly held company, and I got to understand what that was.
Wow. Neat.
So that was kind of like what happened there. So I was there for a good 5 years.
So here you're still less than 33 years old, and you've been through all that already.
Yeah, I'm trying to think back now. I'm going to say I was maybe 27 to 32. I was there, something like that, right?
Wow.
So I stayed there. Donnelley had owned it. We were a publicly held company. But then, so I was really, really close to the CEO of that company. His name is Tom Bradbury. He still has a company called Premier Technology in New York. And he was just a real mentor to me, probably the most influential mentor in my career. And we were very close. And then they wanted him gone when they did this IPO. They wanted to roll up different managers to do different things. And it was a huge mistake, but they, so they let him go. And then someone else came in and we didn't get along. And then it was just bad thing after bad thing happened. So I said, this is time for me to go. So I left that company, and the guy who started the first company I was with, that first consulting company that I said I had talked to last week, he started another company. He was really good. His name is Randy Zahora. And Randy was, I stayed very close friends with him. He was a great guy and very innovative. is another important person in my career. And he was really good at seeing things and investing in them before they really blew up. So the first one, he invested in network consulting before anyone really did that. And then there was a product called Lotus Notes that was really taking the business world by storm. And it was really nothing. And he's like, this is going to be huge. I'm going to invest in this because I think this is really going to be powerful in business. And he was right. So he built that company, and he maybe got it to, I don't know, 3-4 million, and it was very profitable. He was doing great. And he had known that I had gone through a sale and an IPO. So he said, I approached him and we worked out a deal because he felt like I could help him build that company up and sell it, and we could all make a lot of money. So I became a partner there. I was granted equity, and that was my goal, was to help him grow it, help him find a buyer, help him negotiate the deal, and help him sell that company. So
and what was the name of that company, Dan?
That company was called Work Group Productivity Corporation. And we found a great buyer. We built it up. I expanded nationally. We opened an office in Denver, an office in California, I think. And I think revenues maybe tripled or something, or to 3 to 9 million. I mean, it was really, really going well. But I had learned from that previous company. I knew what a deal looked like. I knew what a deal structure looked like. I knew what a buyer would want to see in a company. So I kind of learned to reverse engineer the company. This was super valuable experience that I'd learned, and I really put it into action for Randy's company. And I knew about, EBITDA and debt and deal structure. And I knew what that company would look for. And they were looking for every single thing that I was prepared. So when they were interested in us, I mean, I had all the documents and everything ready to give to them. Right. And I was just, completely prepared. And that deal went through, and it was just a crazy, crazy good deal. And everyone was happy. I mean, I made money as a partner. There was another partner. He made money. My friend Randy made a ton of money. And it was great. And it was a good company who bought it too. They were a publicly held company, and I got along really good with them. And then they said, hey, we like you. What are you going to do? Do you want to stay? Do you want to go? I'm like, I think I want to go. I think I'm finally ready to do my own thing. And they said, well, let us fund it. We'll fund it.
How old were you? How old were you at this point? In what year? Let's say.
I was 34 years old. 34 years old. This would have been 1998. So, and I almost took the money. They were going to give me, I think, 15 to 20% of the ownership. They were going to fund it. And I almost did that. I'm like, I've gone through a couple of deals now. I got money on those last 2 deals as being equity holder. And that was, probably the toughest decision of my life, to not take that money and to use my own money. So I'd amassed some savings, always was a good saver growing up, and had these deals where I made some money. And I basically took all that money, every dollar of it, and I invested it in my own company. And I lived on nothing, right? I mean, I remember just going to the bank and taking out $5,000 to go pay the bills, or to do this and then buy food. So that was a huge decision. And I would give my wife credit for pushing me, and my dad and my friends, my old CEO that I mentioned. Both CEOs said, my friend Tom Bradbury and Randy Zahora, they both were very influential in pushing me. And I took that leap to start the company I had before this one, called Project Leadership Associates. And I saw a gap in the marketplace. So I knew by this time, I knew how to buy a company, sell a company, grow a company. I saw how it was growing well. Yeah, exactly. I knew how to do it. I've seen it done well. I've seen it done poorly. I understood how to grow a company from an enterprise value standpoint to create value for shareholders. So I grew, just a phenomenally good company. It was called Project Leadership Associates. And from 1998, I had it, and then I sold it in 2012. So
And you grew it from what to what? From nothing, of course, to
I grew from one employee, me, to we had about 256 employees, and about 50 million in revenue.
Awesome.
But I think seeing different things done certain ways, right? Done well and done, not so well. I felt like there was a gap in the marketplace. In our world, the average IT consulting company in Chicago sold a lot of product and let's say 50% product sales and 50% service sales. Mm-hmm. But I saw a gap that to do what the larger companies are doing, to do all services, no product, and to bill not on a fixed fee basis, but on a time and materials basis. And now it's done all the time. But, in 1998, it was really just like the bigger companies were doing that. And my product offering was a little bit different than other companies were of that size. That was the second differentiator. I had different service offerings and
let's tell us a little bit about the differentiation. We love talking about it because we believe it's the lifeblood of a successful, growing, organization.
Well, so to start with, it was different than what it ended up, right? Because I believe that you grow companies in stages, right? Mm-hmm. So, what was my strategy at first? It was just to sell whatever the hell I could to go get my head above water and get cash flow positive. So I was always focused on earnings. I did not care about revenue. Not to say that companies that focus on revenue, let earnings come later is bad, like Amazon.com did that, right? But it just wasn't my way. It didn't suit my makeup. So I was really, really focused on earnings. So I wanted to grow a company that had enough cash flow but made money quickly. And we made money, you wouldn't believe it, but from month one, we kind of made a tiny profit in month one. Month two, made a little bit more, made a little bit more. We had, I'd never lost money in any month of my existence before I sold that company.
That's not common.
It was just, I don't know, just a great run of luck. Or I'll tell you one thing, I had awesome people that worked there, but we can get into it in a little bit. But to answer your question, how I would differentiate myself, as we got a little bit bigger, I had, I focused on a vertical market. So, and then I developed it was easier to develop solutions for that market. So I understood the way that market worked and what was important to them. And I differentiated myself from fewer competitors who only focused on them. That vertical market was legal. So we were, my company became the largest legal technology consulting company doing the stuff that we did in the country. And there were, I don't know, just thousands of law firms. So at the end, I think we had about 450 law firms. And so that was one, right? Focus on legal. Second thing I did to differentiate myself is that we had a large amount of different services. So I believed that if we got into an account, we could cross-sell multiple different things. And I know that you've done the same thing, Gary, with, you do a lot of different things. You started with paving, then you do roofing and all that. And that was how I did it. I felt like I wanted fewer relationships, but I wanted to do more with them. So this was a very strategic concept that for me, I wanted to create long-term strategic recurring relationships. And I felt that if I can do a lot of different things for them, I was more valuable than if I can only do one thing.
Sure.
It's also a little bit, since I was so focused on earnings, it was also a little bit more recession proof. Sometimes they would be done with this, one of the things that we did, but then we would pivot to something else that they did need. So we were working, it also allowed us to work with different aspects, different areas of the company. So we were working in, the accounting department, the IT department, the sales group. So we were in different areas of a company cross-selling different services. And that was another key differentiator that we had. And then the third one was we, about 2/3 of the way through, I acquired a small firm that did business strategy. Because I felt like the larger firms, I'll say like Accenture, that's what they did, right? They do business strategy work, and then they do IT work, and then also accounting. But we did, I felt like adding business strategy would get me to the CEO, and it would also allow us to cross-sell more IT services. So I acquired a small business strategy firm, and that really, really worked. I was always into building a game plan, building a long-term plan, and following that plan. You know that personally from all these years. And that, I was really able to see it in action, and that we were able to do some enormous deals. We did a deal with the Chicago Mercantile Exchange where they bought Chicago Board of Trade, and they hired my little firm to work on the integration of those two firms. It was not the IT integration, just the integration. Like, what are the products that we're going to now sell as this combined organization, and who should stay and who should go? And we competed against a lot of big firms. We had strong relationships there, and we closed that deal. They paid us maybe $6 million for that. And so we did a lot of this business strategy work as well, which helped us become even more strategic on the IT side. So in the end, it was maybe 20% business strategy, 80% IT, and I had various forms of IT. So that would be the third way I differentiate myself. So those three things were the key to my success in growing that company.
And it worked that you're able to get in front of the CEOs a lot more often, right, with that strategy compared to just sticking with the IT, right?
Exactly. So we had a lot of different relationships within a company, which allowed us to keep them for a long time.
Right.
The other key thing that made me successful was all the people that worked for me. We had just the best culture that I've ever seen in a company. And I know I'm saying that from a very biased standpoint, but it was just unbeatable, just fantastic. We had, at one point, there was a 10-year period where we had 2% voluntary turnover. No one left. And we were making a lot of money. We were sharing it. I had given a large majority of people, maybe 50 people, stock in the company. We were paying dividends on that. So we were sharing the earnings with them. It was just a phenomenal culture. And we had built so many great leaders there. Well-rounded leaders, kind of getting back to my other point. We built a lot of great, well-rounded leaders. Many of these people have their own business now. And we just had a great culture. No one left. We were all very close friends. And that's what I would attribute. Really, I started it, right, but I had some great people to help me really, really grow it.
So you cross-trained a lot more than most, maybe. Cross-trained a lot more.
We built great leaders. And as we got bigger, we formalized that training. We had our own management training program. And we really believed in giving leaders their, I always felt like it was silly to have someone be a leader and not give them the authority to do the things they needed to do, right? So, and I see this all the time from small businesses. They have managers, but that manager really can't make a decision, right? My managers could. They had their own P&L, their own business plan, and their own budget. And we had 6 different practice areas. And so I had 6 different practice leaders, and they were real well-rounded executives. And we built them into be great executives. And that was, I think, just the key. So I tried to build a lot of Dans in there, push down my skill set to them. I tried to mentor them, and it really worked. But I let them fail. I let them make decisions. I let them, they had, could spend up to $50,000 without approval. They could hire someone without approval. We had checks and balances in place, but I let them fail. Right. And then what did the leadership training look like? What did the leadership training look like for your managers, Dan? It was on that well-rounded scale that I was mentioning before. So we trained them in sales and operations and finance, in management and in strategy. And so they would have sessions in those 5 different areas. And with many of the people, almost all the people, we would stress 1 or 2 more than others based on what their background was. So everyone's not good at everything, so they would have gaps, and we would try to fill in those gaps with that training. And the training was good, but it was really the mentoring that came after the training. That's what really worked. I think that's where the real training happens, right? So I think it starts kind of in the classroom type training, but it was really more like mentoring and going through and say, okay, let's make this decision. What do you think we should do? I'm seeing this. What do you see? That type of mentoring, I think, was super important.
Robbie, and that's something that mentoring comes into every conversation almost when you're talking to leaders.
Without fail. Yeah, it's incredible. And I really like you were for sure progressive at the point in time where you were thinking far enough ahead to involve the strategies so you could work with the C-suite, you could develop stronger relationships with your clients. It's not an easy strategy internally for you to fulfill.